Okay, so this is going to be the high, oh, what am I looking at here? Okay. So looking for ranges to trade.
US dollar only, or are we gonna do the GBP US dollar?
Now we're going to do a couple of things. We're
Okay.
going to do a go over this. So we're looking for ranges to trade, ranges being support and resistance. So we find them by using the higher time frame, namely weekly. I spelled higher wrong. Look at that. Good job it's not an English lesson, is that right? With dyslexia there. The time frame, namely the monthly and weekly. We determine these ranges based on the 50% candle retracement requirement. We enhance these levels with further support and resistance using the close, open, high, and low of the monthly, weekly, and daily. We also use Fibonacci levels, namely the 127, 236, and 382. All right, so that's put there, just so we okay. That there for a minute, and then that can be looked at later. Just kind of gives the information of why we're doing it and what we're looking for, right? So let's see how we do it. We're going to start with the US dollar, because the US dollar is our primary currency, and that determines what we're going to look at throughout the rest of the week, the day, and other time frames. So we're first going to go to the monthly. And the first thing we're going to do is we're going to mark off the current previous months, because the month that we've got right now is still running. So there's things we can do, right? But because we do look at this literally every week. Um, so we basically look at the previous month. So I'm going to show you here Here's the live month here. So this is the previous month. So we're going to measure this just to show you. So the Fibonacci tool from the high to the low of the candle, and we have the levels marked here. We're marking this 50% level right here. So this was the 50% level of the previous month. Now you can see the current month has gone past it, which now this is acting as support for the monthly period. This is main support. So we use this 50% as support. Now, for resistance levels, we look at close and opens. And we can see here we have an open here and a close, previous months. So we're going to put a line there. And that marks our resistance. And you can see this previous month hit it, right, and then got rejected. So it's a very prominent level. And then, of course, we have the previous month's high. So we mark that off as well. And because we're doing that as well, we should mark off the close and open of the last months and previous months. And we're going to mark off the low.
Okay.
And here we are. So we're going to mark them off now. So we're going to press this one here. We're going to mark this here. And we're going to put, now it's the previous month's low. So we're in July right now. So we're going to mark it June low. And then we're going to put this on the bottom to the right side. And then we have it at June low. Now we also have the June, July close and open. So we're going to put June, July, close, open. I'm going to put that on the top. There we go. Now we have it. Now this is the June 50%. June 50%. Now remember I said that acts, because price is above it, it is actually acting as support right now. And now we're going to do the June, May, June, close and open. And then we're going to do the June high. Did it again. All right.
Do that big candles.
This one?
Yeah.
Well, we're going to look now, see if we have any further above, but we don't really worry about these aboves until we're above a resistance level, which would be the open and close of this month. Like if we had a 50% here, we're not going to look at it until we're above this level right here. Does that make sense?
Yes.
Right? So we can look at it. We do test, we do check for it. Absolutely, we do. Remember, this is a monthly though,
Yes.
right? So we're in the middle of the month. It's actually the 19th of July. So
Yeah.
we got that. Now, we're not going to count this month, of course, but this is last month. And we can clearly see that we've gone past last month. So it's done its job. Now, you guys, anybody listening to this, you listening to this, I'm going to tell you, don't take my word for these 50%. Do your own due diligence. But I'm telling you, this candle right here, right? Its 50% retracement from the high to the low is right here. Boom, right there. Color it blue, right? I'm going to take it off. And you can clearly see this candle hit that blue, right? And then it retraced back. So it hit that 50%. Here's the candle prior. So we have this candle right here from the high to the low. And here is 50%. And you can even clearly see, I don't even have to delete it. You can clearly see, look, you hit it and came. I'm not making this up, guys. I'm telling you, this works like a treat. This was 50%. Now look at this one here. Has this been violated? Let's have a look. So we're gonna measure from here to here, and this particular case, you can see this has not been hit. It doesn't mean we're going to trade it right up there. We're going to notice that it hasn't been hit. Now, when will it be, something we would look at? Well, we have this close and open right here. See that, right? This close and open. So this close and open at this point is a resistance area. If we are above this, this is when we will start to use this 50% as high probability that the market is going to go to. And I know we have a close and open here, which will act as resistance. But this is the resistance we look at to be violated first. You could wait till this high is violated. You say, I'll even be a safer and I'll wait till I'm there, and then, be pushing up to there. But we don't typically trade the US dollar. We use it for directional bias. So if you're using this for directional bias to trade, say, the Great British Pound USD, right, and you wanted to sell it, and you want this to go up, you want strength in the US dollar here. So this US dollar index, if it's going up, is creating strength. If you're above here, this is a high probability it's going up to hit this 50%. Make sense? Right. Okay. So we're going to narrow down to this scenario, which we have. We don't want to put a high on the current one because it could change. So we're leaving it as it is. So now once we've done this, we're going to go to the weekly. So the weekly, this weekly candle has closed. And you can see how a lot of, like, look at this June 50% ties into this close and open of the weekly. It is incredible, right? And you look at all these things that have rejections from these levels. These levels are incredible, really, really incredible. And so I'm going to do the same I did with the monthly. I'm going to mark off from the high to low, and I'm going to mark off the 50%. And the 50% is right here. So weekly 50%. Now you can color these different colors if you want to, so it can help you sort of signify which is weekly, which is monthly, and all that kind of stuff. But as you can see, my 50% is on the monthly. I always put the month, and then I do the weekly. I like them in blue. It's just, I don't know. You can do whatever you want. So now we're going to mark off the close. The close is here, which means the open will be there too. Now, the only time the open won't be there is if the market carried on after closing for retail traders, because sometimes they don't get the orders in quick enough. So the market kind of may poke up a little bit. So you may have a different close and open, but typically it's usually the same, but it just depends on the situation. So that does sometimes happen that the open is different to the close. So that is the weekly close open right now, we're assuming. So we can put that. And then we're going to put the high. We're going to put the weekly high. Weekly high. Yeah. Did it again. Weekly high. All right. Now, I got this June 50%. So I'm also now going to take this and I'm also going to write weekly close open June 50%. So why do I do that? Well, I'm really emphasizing this level is quite the level, right? Very short little push down. We can see we have a 50% here, right? So this previous week, not last week, the previous one from last week did not add a 50%. So we got some quite big strength from the US dollar here last couple of weeks. So we're going to mark that. And we're going to mark that right there. And that is weekly 50%. In some cases, I would put previous weekly 50%, right? So, you just put weekly, but you need to know what it is, just go back to the weekly and check it. It's not that bad, really. Here we go. And put the weekly low here. Below. There we go, weekly low. All right, so that's all we need to do. Now, the other thing now we're going to do is we're going to check any Fibonacci scenario. So we can see quite a downtrend here. So we're going to go from the high to the low. We use our Fibonacci tool. And we've got a swing here, right? And we have a 382 that has not been fulfilled. So we're going to mark that. Now we're going to put weekly 382. $226 was hit. We don't really need to do that. We could add the B, but you can see, look at this area around here. This is interesting. This weekly close open, June 50%. Look at that with the B, a very, very big area. So you can go on a lower time frame and you can mark this level between these two lines, right? Because you got a low there, you got the B there. This is a very, very good level. So we can do that on a lower time frame in a minute. So we basically got everything that we need. Don't really need anything else at this point. You could mark this level off here if you wanted to, but price is way up here. We got a long way to go before we worry about this area here. So let's go to the daily. Any questions before I move on from?
Yeah, thank you.
We good? Okay. All right. So now we're going to the daily. Now we get a little serious. We start getting serious. So we don't really mark off 50% at this point. We're not doing that yet. But what we're looking at on the daily is current direction, where are we going, what's going on. So we've got a Fibonacci that is down. We've hit the 382. It's above the B right now. We've got a swing here. Let's see what that swing is doing. And it's hit a D extension. So with all this in our mind, right, what is the high probability of us that we're looking to do? Well, we know that this has got to make a new swing. And we've got the high, and we're going to do the A from here, the B to there, and we're going to need 2 candles. So we need to start looking at where is this, can this retrace to, right? So we got levels here that it could retrace to. See, we got these.
Sir, I have a question. Wouldn't you use that big downward move that like 4, 6, like 8 candle and maybe put a swing in there versus the bottom one from the A? Like
No,
using-
because our current trading is from this level up.
Okay,
I understand on the big picture, but we're just trying to concentrate on what we want to do next week over the next few days. So the trading has got to, once we've plotted of what we want to do, you can look at the bigger picture. Absolutely. We always like to look at the bigger picture, but we're also getting a determination on the US dollar, which is the directional bias of the US dollar. And we're using this indice that goes against all the other currencies. So is it strong? Is it weak? So right now, is this telling me that we're having weakness? Not necessarily, because you see this went down and then rejected back up above this weekly 50%. We do know, though, that for this to hold as a new swing, now I'm going to put it in manually, this will be the low to the high, right? And we need a second candle. As long as the second candle is below this high, this swing will be formed, right? If it comes up and takes this out, we got to readjust this. But right now, this is it. And once this is qualified, and we're going to see where this market is going to go. It's already hit the 382.50 and rebounds, but remember, this 382 and 50% is not really there because we don't have this valid yet. We are just speculating that this is going to be the low to high.
Yes.
And until it's verified, it's not. And once it's verified, then we can place the Fibonacci, and then those levels come after. So we're going to qualify that. Well, you can do that tomorrow when this opens up 2 o'clock, and we'll see where it goes. My guess would probably go down here a little bit more, or maybe it goes up. We don't know. So we'll see. So we are defining this level up here as, because we don't know it's for sure, we have to write possible. Possible D extension on daily. And we should say up, possible up the extension on daily. That makes sense? So now we take all this and we're going to go, okay, well, where's this price going to go? So let's go to a 4-hour and see where we are with the market, because we're not really getting much answers here, right? We're not getting much, right? We do know. So let's see what we got here. So remember, this weekly 50% has not been hit because it's, it says hit here, but remember, we just measured this, right? So this could come down here and hit this 382. It's already hit the 382. It's already done this. Now, is this a swing here? Right? Look at this swing that we have here from this scenario. So let me do this, right? So we got a B, we got A, B, come down 236, up to the 127. So 127 level, and this weekly close and open. Now we're going to color it. Now, why am I coloring it? Because I got two things. I got a 127, right? Which right now it's underneath, right? And I got that close and open. That is a nice level for a bounce. Does that make sense? Right? So we're creating this structure for us to make better decisions, more informed decisions. Now we've also got a swing here, don't we? Right? So do we have two candles to the right? No, we don't. So we can do it manually. So we're going to say we've got the high and we got the low. We've got one candle, right?
Yeah.
And it's right by that level right there. So probability could be that this opens and comes down and closes and creates the swing. Make sense?
Yes.
Right. So now we're going to determine what is this going to do for us. Well, we have a weekly low here, but we also have a retracement of a 382 that has not been hit. You see that, right? Right by that weekly low. So that means this is another nice level. Notice I'm not including the D extension because it's below. So we want to keep that right there. So actually I'll recalibrate that color. I like that color. Change the color. Okay, gonna be stubborn. That's fine. I'll do a new one. Okay. So what am I looking for here? Right now, this is in a place where I believe that this market could come down.
Yeah.
There's a 50% here, right? So on a 4-hour, what am I looking to do? To come to the 50% and close below it. If it closes below, I'm looking for the dollar to get weak and to come all the way down to this level. When the dollar hits this level, I'm expecting it to bounce and create strength. Could be temporarily. It will be great if it passes this level, hits the D extension, and hits this 50%. I'm not going to lie. It's going to be really good. So what does that mean? So that means that's what I'm waiting for. I'm saying right now, I'm in a position where I am at a little higher price. I'm looking for a swing, for a correction of the upswing. So it needs to fulfill the 382, right? So I'm looking for it to go down towards that weekly 50%. I would like it to close below that weekly 50%, which would be also the 236, and then carry on down. And while it's moving down, I'm going to the Great British, the Euro, the Aussie, and if I'm getting weakness, I'm buying. Well, maybe not buying, but you could see some strength that you could buy those currencies, right? Or the US JPY you could sell. But this just shows you the levels where the market could go to.
Yeah.
That's all we're trying to show. Make sense?
Yes.
Right? So now you know that if price comes down here and it comes close to this level, ooh, that's a weekly close open plus a June. Ooh, geez, maybe I'm just kind of look how they bounced off of here, right? And I mean, I know this bounced here, and I know this was news from last week of the potential talk about firing Powell, but it still hit there and then bounced up, still hit that level. Why didn't it carry on before it bounced up? Because that level was important. Does that make sense? Any questions?
Thank you.
All right. So let's see. Do you want to do this on another indice, or do you want to go to a specific currency to see if what we've talked about makes sense? See how we do that. Okay, so which currency do you want to look at? Pick one. Has to be a US one, obviously. US US JPY? Okay, so we're going to go to the US JPY, right? So what are we looking for? So we're looking at US weakness, right?
Yeah.
Right, because we're at that level. So we're going to do exactly the same thing. We're going to go to the monthly. We're going to do this whole process over again.
This is the currency pair already, so you're not looking at the GPX right now.
No, I don't need to. We can if you want, right? It's an extra step. You can if you want.
Okay.
But that's what I asked. So do you want to look at the JPX? No. Okay.
Because we know it's kind of on a weaker side. Or
Yeah.
who knows what it is, but that's what they say. And
Well,
so
we've already said right now we are looking at potential USD
yes.
weakness.
And it doesn't matter if the JPY is generally weaker.
Doesn't matter. We're looking for US weakness. So if we're going to get US weakness, we're looking for JPY strength. So if JPY needs to be strong,
Yeah.
what are we looking at? Is it go down or up?
Then we're gonna buy. It's gonna go down.
We're going to buy, so it's going down.
No, because it's gonna go up and we're gonna buy. No.
If we look for US strength against the US JPY, the US is first.
Yes.
That means it's going to buy. It's going to go up. That
Oh,
means it's going to be strong.
So
So the JPY, when we want the JPY, so if there's US weakness, it's going to cost less US dollars to buy JPY, right?
correct.
Less, right? So if we JPY strength, it means it's going to go down, so it's less to buy the US dollar.
Yeah.
Make sense?
Yes.
All right.
So, yeah,
So
it's
in this, yeah, so
reversing the currency pair.
yeah, so in this particular case, we're looking to go down, but let's see where we are. So we don't have a finished month yet, and we have the previous month. And typically, we don't normally do this in the middle of the month. We do this at the end of the month. And here's the 50% here. And quite clearly, it's already been hit.
Yeah.
Right? We see that, right? Even, the high has been taken out. Like, that's, I mean, we got some pretty amazing strength from the US in the last couple of weeks. So, and it even took out the week before, right? So we have this monthly, we need to mark that. So what months are those? So this was July, June, May, March. So April, March, right? Yeah. Hi, may I? Uh, all right. We don't need to do anything else. So now we're going to go to the weekly. Actually, I should do this, yeah. Yeah. So that is no, that's June, July, not May, June. Sorry.
JJ.
June. Yeah, JJ. July. Close. Open. Right?
Yeah.
I'm not going to do anything else yet because the price is way up here anyway. So I don't want to do too messy. So this was June's 50%, right? There we go. Now we're going to the weekly. So look at the weekly. Weekly here. Previous weeks. Did that one other way first. Ah, did that wrong. Oh, look at that. June highs right by the 50% there. Look at that, eh? Crazy. Actually, no, I'm gonna do this probably. There you go. That's better. There you go. I actually got to color it. There we go. Now we go. All right. So we have a down scenario, right?
Yeah.
And we have a retracement that needed, did that hit 382, 15249, 152? No, it did not. So 382 has not been hit. All right, now we got it up this way. So we got a 127, we're above, so it's going to this area here. So it's going completely against what we wanted to go, which is fine, it happens. Sorry? Well, that's what I'm saying, which we don't want it to because we're expecting it to come down. But on this, what it's showing us is that we could have a little bit of down to here, we could have a little bit of down to here, right?
Yeah.
But currently in this scenario, we've got an up scenario. Here's the target right there. And the up scenario being we haven't completed 382. So we're right by a B. So the question here is, so what do we do? So we need to be above this high, right? This high right here, not this. How did that? No, that's May. So that's the monthly high. So we got this weekly here. So this weekly high, if we're above it, then we can carry on up, right? Because we got this swing, it's done this, it's come down, it's going up, it's going up. But we also realize that the US dollar is against resistance,
Yeah.
right? So we're expecting US weakness.
Yeah,
So if we're expecting US weakness, this doesn't par well for this to go up to the D extension at this point. Now, if on the US dollar that goes above that level that we had, right?
Yeah.
That means it's going up, not down,
yes,
because it closed above it.
yes.
Does that make
It
sense?
totally makes sense.
Right. So what do we need to look for here? Well, we need to look for price to be above here. So we need to wait, right? Now
Yeah.
we are on a weekly, right? So I mean, weekly's pretty big, but you could do things like, oh, I'm going to put a buy right on the high here,
Yeah.
and it could go like, could this April March close and open affect you? So then do it there, do it just above there, and then it could go up to here. But let's go to the daily before we, make a decision. We're just showing you that it is in and up because we've got a retracement from a down here. In actual fact, before we do that, let's just look at where we are on a Fibonacci. We didn't do the Fibonacci, did we, on the up scenario? So we've definitely got an up. It's definitely an uptrend, right? It's big, huge uptrend. So let's see if that gives us anything. Okay, so no. So you see, we do have this D extension here. Yes, it is retracing for this one, but there is nothing to tell us that it needs to come down because the 302 has been fulfilled. We also had a remnants of a pattern here of a head and shoulders, but to me that didn't break it. In actual fact, this could still be a live head and shoulders, right? It's just a lower shoulder here, a higher shoulder there. So this could play out. So this could play out how? Well, here's the neckline. You could do the neckline here. And so if that comes down this way, then we're trading down. And I don't want to, I mean, that's a little too far. I don't want to go ahead on that one. But the point is, right now, it's in an uptrend overall. We've got a retracement. We do have some structure here. The structure here is here, right? Right. But we're just creating levels here. That's another story. Um, so in that case, right, if this moves up, if we're looking for this down, we need to be underneath this black line here. We need to be underneath that level there. So you see that level, right?
Yeah.
So if price was to come below here, right?
Yeah.
So let's look at it on the daily. Let's look at it, see what happens on the day. We created the levels. Now let's see how we can trade it. So same thing. Look at this. Ah, this even comes beautiful now. Look at this. So we have an up AB on the daily, and look where the D extension is. Right there. See why you have to go through all the levels, all the charts? So this becomes really magical of like, let's push this up here, then it can swing back down, right?
Yeah.
It could swing back down because we got this range here. There's a range here, right? And not only that, so what would be the scenario of these levels? So we got daily up the extension. Actually, I'm going to put that right back in the middle. There we go. I want to see what I got here. Do I have anything here? Another swing. Yeah, look at this. What is this? What look at this.
Wow.
Hit the D extension on the subswing.
Amazing.
Oh my God. On this subswing. So now what about this subswing, right? Let's see what this presents. I know what it's going to present. Nothing, because this hasn't closed. So if this is a second subswing, right?
Yeah.
That first swing has been fulfilled. So we got a second one. We need a retracement down here, right?
Yeah.
Which is giving us what we want. Starting to see we're actually getting what we want,
Yes.
right? So this is doable. However, we need to be underneath this May high here. We need to close under this May high, preferably close below this June high weekly 50%, and then we could trade down to this 50% right here, this weekly 50%, because it's the 50% of this swing as well, right? And could we go to the June 50%? Yeah, you could. Could we end up going to? Yeah, you could. Why? Because look at this range right here. And if we were to just, I'm just going to, no, I'm not going to do that. No, we're going to lose everything. I want to try and get you to see this is what I see.
Count now the 5 swing, 3 swings, 8 swing. Would you do that right now or not really?
Say that again, what I
You
want?
know, when you have with the Fibonacci, the 382, when counting like it's 5 up.
No, not in this situation because I only do it on the capitals.
Okay.
So this it will be this one I would count.
Yeah.
So this would be 1, but it has to come down to the
I
D
see.
extension to
Yeah.
create that. So what have I got before it? I don't know. I mean, we can have a look. You know, 1, 2, 3. We're at 4. So this would fulfill, and I wouldn't trade it after this one.
Yeah.
So this would be the last one. So good point. No, good point. But because I've got this building our structure again, right?
Yeah.
Now I didn't want to delete everything because I didn't want to lose everything. But I think you can see it. Can you see that? Right? And you know, so this could come all the way back down here, and it's doable because it doesn't take out the A.
Yes.
It's doable to come down here and still be this A swing, because this A swing will just go back to the green D extension, which is just where we're going, right? It's marvelous. This could just not work out. Doesn't really matter. This, but I have a feeling. This is just a feeling. Just, I have a feeling this is going to come down to here, and then it's going to go back up and break and then fulfill these D extensions. Right? But that's just my, because we can't forget the fact that, you know, on a larger scale, it's in and up. So this is a retracement, and then it's going to break out back to the upside. But you know, on this scenario, so you know, we had this here, right? So we want to look a little deeper. I did want to, but see, this broke, right? And it went all the way back. So then we did the up. It didn't fulfill, right? And this broke again. So we got some indecision here. Does that make sense?
Yes.
So the larger, we can't really look at it. We just have to look at the here and now. And the here and now is giving us a down AB, right? Which is now swung up onto this one. It has swung up to the 778, so 786. So our D extension is here, right? So we've got to get out of this boundary here. But the important part is we're looking at levels. So we got to the daily. Now let's go. What do you want? 4 hour or 1 hour?
4 hours.
Like the 4 hour. Yeah. Getting even better now, right? So let's eliminate this because it's an overall on the higher time frame. You can keep it. So we're going to go from this because our bias is to the downside,
Yeah.
right? we're going to do the Fibonacci from here. And we've got this one here, but see how it broke, right? So that's no good now. So we can go from here, right? Broke, right?
Yeah.
Just showing you. I knew, but I just wanted to show you.
Yeah.
So now we're going from here. And look where we are. So this is really interesting because on the 4-hour, we've got this B, we've hit this 3A2. There seems no rhyme or reason we need to go down on here. However, the daily is on a higher time frame than the 4-hour. Just because we don't see it in the 4-hour doesn't mean so. But look what we got here. We got this in the way, right? We got this in the way. There's a lot of stuff coming here that could go up first before we come down. And also, if we go back to the US dollar, as long as it stays below that level, it could go in it. But if it closes above it on a daily, now it's a change of decision. Make sense?
Yes.
Right? So there's this D extension, there's a B in the way, there's a trend line in the way, there's an April March close open in the way. So there's a lot going on here. But let's look at what we got here. We got a down AB. And look where we are. And we could come right down to here. Right? This fits into the narrative. We could even come right to this green line right here, because then that green line is there, which goes against the daily D extension, and it all fits together. Right? So high probability. So what do we want to happen? Well, what did I say? Close at least by this black line, right? Yes? This May high? Right. We want to wait till we close below it. If I drew a trend line here, now we've got the close. We need to close. No, actually, I'm going to ask you. Right. Now we've drawn this. What are we waiting for?
Be on the bottom part of the X.
Yeah, that means breaking the uptrend line and breaking the closing below that May high level. If you no, I'm gonna do this. I'm gonna do something. If you didn't have that there, where would you need to close?
Then I would say either in the top part of the X or the
Well,
bottom.
no. We're looking to sell. We're looking to sell, right? We're looking to sell. So we want to go below in the below X part.
Yeah.
But we want to break some kind of structure, right? What do we have?
We have that 618 line. We could break that one.
No, we're going down. We're selling. Okay, I'm going to ask you again. I'm trying to emphasize something here.
Okay.
This is a May high level.
Correct.
Right? That is a structure.
Yes.
We said if we close below that structure, we would also have broken the uptrend line. So now we can sell down to that June high weekly 50% and possibly the weekly CO. Yes? Yeah. Or carry on and go down to the D extension, which would be this.
Okay, I would probably wait for another candle and see if it breaks, like it closes above that downtrend line or closes below.
Say that again.
Okay, I would wait for another candle for confirmation where it will close. It's gonna close below the downtrend line or it's gonna close above the downtrend line. Like I would wait for one more candle on confirmation, or I would look at a lower time.
You probably need more than one candle here.
Oh, sure.
Right? The point is, don't worry about how many candles you require. The point is we need to break structure.
Yes, so I would probably look at.
Wait. Where is the structure? We're talking levels right now.
Correct.
We have the X.
50% of the candle before.
No.
No.
The structure is the May high.
Yeah, correct. But
We've already got the May high.
Oh, okay, yeah, but you took it out, so I thought.
No, I took it out because I want to ask you. So here, the question is this: if you didn't have that May high, right? If you didn't have this, what structure would you have to say I need to break?
I would look at the 50% of the candle.
Thank you. That's where I'm going at.
That's what I was trying to say.
Well, you didn't say it.
After, yes,
It's all about structure.
correct.
It's all about levels. We know we want to be in this area here, but we've got this beautiful structure that can help us have a great risk to reward. Because if we broke down here eventually and closed, our stop loss will be just right up there.
So would you look at the last candle or one before? The one that actually,
No, the 50% would be this one.
yeah, the big one.
Yeah, absolutely. Right? Because you're still, if you do 50% here, you're still above this May,
Correct.
June, right? But you're also above this candle. You don't want to be above this candle.
No,
So the structure would be this candle here.
Okay.
You're correct. And I'll just put in a little example. I'm not going to measure it. It's probably there.
Yeah.
It's about good enough, right?
yes,
So yes, I wanted you to look at
okay,
exactly what you ended up getting there. It just took a while
yeah, sure. Thank
because
you.
we're looking for levels to break.
Yeah.
Right. And
Yeah.
this this May high is great, but this fit. So if you're a conservative trader, you could say, I like the idea of it breaking the May, but I wanted it to break that 50% to as well and close there, and then I'll trade it down to here. Now, the challenge being is that okay, so if you're breaking here, now you want to be below it. So let's say you're here. Now your stop loss is 38, but your trade is only it's the 40. So 1-to-1. It's okay, but maybe you could go to here, 105. Maybe you could keep going to it. Maybe you could just go to the B. But look at this. This is nearly a 200 pip trade. This is a nice trade, right? And you just use levels. Now you can even turn around and go, well, let's go to the 1 hour. And why do I want to go to the 1 hour? Because 100 pips is a lot, right?
Yeah.
Now, broken. Okay, I'm starting here. So if I start here and look where my D extension is, just past this weekly, right?
Yeah.
So this is actually pretty cool. So let's say you come along here, you broke down here. Let's say you break here. Let's do this, right? And we're going to do this low right here. So I'm going to trade down to this D extension. That's 52 pips, right? 52 pips. Your stop loss is here is around 20. Great. Then what can you do? You wait for a second swing, right? You get that? Wait for a second swing. Do the same thing again and trade down to here. Wait for another. Then let's speculate. Let's say it hits it exactly, right? So if it hits it exactly, that means the next swing is coming from here to here, correct? No, I did it the wrong way. What am I doing? It's coming from here to here, right? Look
Yeah.
where the extension is.
Just below the.
Yeah, look at it, right? The wheelie is so you've already made what did we say? 60 pips? What was it?
Yeah.
Yeah. Okay. So you already made 6 pips. Now you're waiting for this to retrace back to this trend line here, right? Hopefully back to this level here. We don't know, right? Let's say it's below let's say it's below this low right here, right? Let's say you enter below that low right there. Make sense? Right. So if I go from here to hit this D extension, that's another 95 pips. What's your risk here? If you're trading from here above the B, you want to be above a high. Here's a high. Here's a 30 pips. There's a 3-to-1 right there, right? Now you've made 90, you've made 60, now you're at 150. Now what do you haven't reached with the extension yet of the main one from the 4 hour. So what happens? Well, you do another swing. See where I'm going here?
Yeah.
Your risk is so much lower if you're on the lower time frame.
Yeah.
So if this hits exact right there, so that means this comes down to here. Let's say we go to here. So this is the high. This is the. Why do I do that again? I get so excited. I forget where I'm going. So we're saying this is the high here from here, right? Roughly. Let's go here. Let's be a little pragmatic here. So we're going, why is it doing this? I'm doing it the right way. Yeah, thank you. So this hit here, look where your D extension is. Right close to the 4 hour. So that means you could do exactly the same thing here. Maybe you got a trend line here, right? You're entering up to here. Where's a level? So let's say you're entering right here. So you're entering right here. You're trading right down to there. There's another bar. Maybe that's too high. That probably won't be there. But even if you did another 60 pips, right? You're at 90, 120, 210 pips on a 1 hour time frame, doing 3 different trades, risking 20, risking 30, not risking, you know, all on one and letting it go up and down, and you're getting yourself frustrated. Because if you did on the 4 hour, what would happen is, yes, you would, yeah, you could do well here. But let's say you were trading here, right? And we said we wanted to trade under here, right? So we use this low. So our stop loss is here. So our stop loss is only 40, right? But you know, even if you come down to here, right? If you come down to here, that's only 43 pips. It's going to retrace.
Yeah.
So could it retrace right back here? Now you've only got 2 pips. Now you're going to go a little further and it's going to go here. So now you're up 100 pips. It's going to retrace up to here. Now you're only up 40 pips. Now it's going to go down here. Oh, it's 98 pips. Where's it going to retrace to? Up to there. You'll finally ending up get to the 200 pips.
Makes sense.
But if you do it on the 1 hour, you actually end up making more.
Beautiful.
So you've got a choice to make. Are you going to be okay to accept this kind of scenario on the 4 hour where you get this goes up, goes down, sorry, retraces up, goes down, goes up. Oh, you're in the money here. Now you're out of the money. Right? You see what I mean? You're not
Yeah.
banking any money here, but you're banking money on the 1 hour.
Yes.
Does that make sense? So at the end of the day, is what you want. You will eventually get there. You will get there, but you just got to be able to accept that you could be up 80 pips, and then you could be down 20 pips.
Yeah.
Now you could have a rule of moving your stop loss,
Yeah.
where you say, "Well, I got stopped out, so I made 60. I got to get back in again." Right? You're the one that has to figure out what works best for you. But that's just all about levels and how they work.
Beautiful.
Any questions?
No. Very clear.
All right, let's stop that recording.